everybody. How y'all doing today? I'm Joy, the mortgage boss, and I just wanted to come and bring another piece of information to you to kind of go on what we talked about last week regarding the chances of your loan being approved as you kind of go up those different credit tiers. I had a recent example of a gentleman that applied for a home loan with me. He needed to get a conventional loan and he was making an offer. He had already been approved for an FHA loan, but unfortunately, this particular property required a conventional loan only. Like that's the only thing that they would accept on that property. So I'm going to kind of go over his credit profile or his applicant profile and then just kind of tell you what the outcome was and why. So when we talk to applicants, I ask a couple of questions and I could kind of eyeball a scenario to think or know if it'll be approved or not. And so this particular guy had a 694 credit score. So with a 694, we knew from last week that kind of puts you right about 16% in terms of the likelihood that your credit, your application would be approved and funding. He was applying for a conventional loan, so he was doing 5% down, which is well above the minimum 3% down requirement for a conventional loan. His debt to income ratio was 42%. Again, well below what would be considered a high debt ratio that would be considered risky. He was applying for a $250,000 loan and $250,000 purchase price. So the loan amount was like $237,000. So I said all of that to say, this looked easy to me. It was nothing about this that suggested it was going to be difficult. So as a loan officer, I have to run everything through an automated underwriting system, which the automated underwriting system is what tells us whether or not this is a good risk or not. And then it goes on to list out the reasons why it is a positive or negative, what the positive or negative risk factors are that are involved. So when I read the findings, the guy's whole thing was negative. So the risk factors that were involved was, one, he had too many inquiries. The other thing was that he had limited credit history as well. And he also had delinquencies. Delinquencies could be collection, things like that. So I went back to the credit report to re-review it to see if I could match up what the findings were saying versus what the tangible line items were. And I was a bit taken aback because I did not realize that his credit score could have been artificially inflated in the way it was. So he had 6 line items on his credit report. 4 of the 6 items were what's considered self-reporting credit history, where you may have, your landlord report your rent payments to the credit bureaus. It could be your phone bill. It could be like your electricity bill. These are all ways to establish some sort of history of repayments and showing that you're paying things on time every month, which the credit score is a reflection of your habits of paying things and paying them on time. So that was 4 of the 6 items, which in this case kind of boosted his credit score in a way that was a little artificial. Like, not artificial, that's probably a bad word to use, but it would have probably been better if he'd had credit cards to show he'd been paying these things for 3, 4, 5, 6, 7 years on time, but that wasn't his story. The other thing that we saw was, like I said, the number of inquiries. So you want to be careful about shopping for credit, applying for this card, and getting declined. That's a big deal. The one thing that really stood out to me, though, is the debt to income ratio. So what I thought was a good idea turned out to not be a great idea because he had the other 2 items of those 6 that I mentioned was a car payment. So what he did was he had a car payment, and I can't remember how long he had it, but let's call it 4 years. And he decided to refinance the car payment to try to make it lower. The car payment did go lower, went down by like $70 some odd a month. I do remember that. But it was counterproductive because while it lowered his debt to income ratio, which again is the money that you got going out versus the money that you have coming in every month, it shortened his credit history. So it's like if you have something you've been paying on for 4 years, that's 48 months of history, and you close it, because that's what they do. If you buy a new car or refinance it, they're going to close that out and they're going to open a new one. So when you take an average of that, it literally cut his history in half. And so that was the only line item that was any type of credit that wasn't self-reporting. So it did not benefit him because of his whole credit profile that he had. So the other thing was, I said he was doing 5% down. And I forgot to mention that 5% down that he had was not his own money. Y'all, I say this all the time, and I mean it with everything I got. I mean, it's not to offend anybody, but you can't buy a house without no money. This man did not have any money. He was getting 5% down as a gift. You can do that. That's great. There isn't anything wrong with that. But the problem was when I looked at, his assets, he had $600 between 2 bank accounts. But he wanted $250,000 to buy a house with money that wasn't his and credit that was kind of not his. You see what I'm saying? So I wanted to come and I wanted to share this story, and I'm looking at my sticky note to make sure I covered everything. I wanted to share this story because when you are already starting from a position where you, I don't want to say barely qualified, but a position that isn't the best, and you start to layer things on top, it continues to decrease the chance of you getting that approval. In isolation, all of these things would have been fine. And at first glance, I thought everything was totally fine. But as I peeled back the layers and I started to put my risk assessment hat on, of course you can't have $250,000. Like I said, he had artificially inflated credit. So for everybody that, is really proud of not having a lot of credit, get you some credit. Okay? Go get you some credit, girl. For real, you gotta have some real credit because these creditors are assessing whether or not they want to know how did you treat your boo before you came to me. Before we started dating, how was you treating them? Right? It literally is like that. You kind of taking a resume of what did you do before you got to me. So please establish some credit. You can get a secured credit card. Self-reported credit is nice, but you need to have something to offset that, is the point of the story. 5% down, your down payment can come from a variety of sources. But unfortunately, that was literally all the money that he had to do this transaction with someone else's money. I mean, would you give somebody $250,000 that didn't have any money? You want to make sure you have your own money. Period. You want to have some of your own money. It could be 401k. It could be in a checking account. Even if this man had $6,000 or $7,000 in an account somewhere, the outcome could have been different. Okay? And the last point that I want to make is before you go reorganizing your credit, you may want to have a conversation with someone that's a little more knowledgeable because, again, I wouldn't have known the impact because I'm not a credit expert. I would have never known the impact of refinancing a debt because in my mind, I'm thinking, oh, that's a great idea. Like it's going to help your debt ratio. But unfortunately, it had an opposite impact because it practically erased the credit history that he'd already established, and it ended up being too short. So I hope this information was helpful to you, because like I said, it was something that I never come across before. And you know, you got to have something positive to offset anything that could be perceived as negative. In my opinion, none of this was negative in isolation, but when you bring it all together, it did not have a favorable outcome to this gentleman. And so unfortunately, he was not able to move forward with his approval for the conventional loan. And because this particular property only would accept conventional loans, he lost out. So again, I hope this information was helpful. And if you all have questions, please reach out to me. If you guys don't mind, please share this. I was incredibly grateful for all of the shares that you all had last week and all of the views that prior video got. Next video will fold into this, and subsequent videos will all build on the knowledge from before. So thank y'all for listening to me. Have a good day.